Good morning, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the morning call. Scott's out today, so if you're looking for some guidance during the trading day, look to some other T3 Live subscribers. I think he has a wedding, so filling in this morning. But could be a quiet day based on what we're seeing in the futures this morning. Futures are up small. They were down a little bit overnight as we saw some extreme weakness in Asian markets. We saw the Nikkei finish down 2.7%. We saw the Shanghai composite finish down about 1.5%. There are some concerns about China's tightening their monetary policy and the implications of that. Japan's trying to emerge out of sort of a deflationary phase. Issues like that. The volatility continues in those indices, and it's not that type of extreme volatility is not exactly what you like to see. So some red flags there and a bearish week for the Asian markets. But like I said, U.S. futures are shrugging off that weakness, thanks in large part to what continues to be a very strong earnings season. And you can say what you want about the economy and whether or not it's supporting the fact that the market's at all-time highs, but corporate earnings all during the last few years since the financial crisis have been extremely strong, been one of the bedrocks of this rally. So that's what we're continuing to see. But let's go ahead and take a look at the chart of the spiders, give you a look at the action over the past few days. Basically what we're seeing now is some sideways digestion. We've basically gotten over the last big obstacle of the year, which was the debt ceiling fight. That can has been kicked down to the beginning of next year. You do have, the whole Federal Reserve transition could, rankle the markets a little bit. You have Yellen confirmation hearings. You have a Fed meeting coming up next week. But most people think that they are likely to put off any QE tapering until next year. So most people perceive that all major obstacles are out of the way of this market, and it can basically just rally on the heels of strong earnings. And that's what we're getting. The last 2 days, we just had some sideways digestive type action, which is extremely healthy. There's two ways that markets digest. They digest by probing some support levels, by probing some Fibonacci retracement levels to the downside, or they just rest by going sideways. And sometimes the sideways rest might take a little bit longer than if you were to get a downside pull-in. They don't provide as attractive prices, but when you do get sideways digestion, you allow the short-term moving averages to play catch-up. And then as long as we get strong earnings and there's no real negative catalyst, I think the market, there's nothing really in the way of it continuing higher. As you can see, we got that small pullback on Wednesday, but then yesterday we finished higher, both quiet sessions as the 8-day moving average plays catch-up. But last night, we continued to have strong earnings reports as we saw, I'll just go through them quickly. Amazon, really strong report. You sort of got a little bit of a tip there, or a hint that people were expecting some strong earnings from Amazon. This time, they didn't need a pass from Wall Street. Recently, in their earnings reports, they've been coming out with weak earnings. Wall Street's been giving them a pass, and the stock's been rallying anyways. But this time, you saw Amazon break out to highs, put in a really great flag. We don't like to take equities into earnings, so it's not like you see this bear flag and say, I'm going to take Amazon stock into earnings. But the stock we can go to the 24-hour, 5-minute, just to get a picture of where it is pre-market. And as it was earlier, it's above 360 now, so it's up more than 8%, between 8 and 10%. Really strong move there. You zoom out on the chart, you can see that's all-time highs for Amazon after its really strong rally that it's seen over the past few years. And this is one that continues to have some short interest and some people that don't believe in the story because the company really doesn't make that much money yet, but they continue to please analysts and investors, and everybody sort of seems, despite the fact they don't make a ton of money yet, believe this company has an extremely bright future, and the stock is opening more than the implied volatility of the earnings this morning. So really strong move there. That's helping the Nasdaq make new highs. You look at Microsoft. Microsoft also will go to the 5-minute, 24-hour there. Let's see here. Are we on 24-hour? Yes, we are. Microsoft set to open around 35.77 this morning. So it closed yesterday at 33.72. So a nice healthy move there this morning, up to above this recent pivot to completely fill this gap that almost completely got filled back in late August. Then the next pivot to watch, if we're able to maintain strength in Microsoft this morning, is 36.43. This is a stock that I generally like Microsoft. I think they have a nice dividend. They give you a steady income if you're looking for that type of investment. And it also has some price appreciation potential. You have Steve Ballmer, the much maligned CEO, finally stepping down in several months. Could pave the way for a more innovative type of strategy, whether they break up parts of their business or refocus their energy in other places. But I think this is a rare opportunity to get a nice dividend, nice income stream from a stock, but also the potential for price appreciation because they have a ton of cash on their balance sheet. If they can get somebody in there that knows how to use it, I think it could be very lucrative for the company. It's one that nice earnings report sets the stage for a potential rally there. Zynga is the other one that one of the highly followed names that I know guys on the virtual trading floor have been looking at. Scott went long Zynga calls yesterday in anticipation of the earnings report. Stock is up nicely. We'll once again go to the 24-hour time template to see where it is. Trading around 390 this morning. So you look at the daily chart. 390 is just above this high. The high from this candle is 395. So that'll be the key level for Zynga if you're watching that to see if it can break above that. High short interest on the stock could get some upside momentum. So something to keep an eye on there. And you see this long-term lower level base that's been in place. And right now this morning we're knocking on the door of that. So if we do break above it, we have the rest of this gap to fill all the way back from summer of 2012, and that gap would get filled up here around the $5 area. So something to keep an eye on there. Zynga is not one that I would love to put in the drawer. I think the company has a lot of issues, but when opinion gets so skewed in one direction on a stock and there's high short interest and they actually come out with okay results, it can be enough to ignite one of those lower level stocks, and I think that's what you could see with Zynga. A last one that it's one that if you follow me on Twitter and if you follow me, you know that I've been playing CLF looking for a move in that stock. I think my average price is in the $18, $19 range, and I've just been looking for a bigger move in this. If you try to day trade CLF, you're going to drive yourself crazy because the stock, it trades in wide ranges. A lot of times in the morning it rallies, in the afternoon it fades. You can't really get a handle on it on a day-to-day basis, but it's one that I think, iron ore is its big business, and those prices have been so depressed and they've started to lift, and the company's been able to weather the storm, the commodity storm, to the point that I think now things are starting to look up for them. They had a really nice earnings report last night. Stock, we'll go to the 24-hour, 5-minute on that one as well. It's up around 24.55 this morning after it trades on light volume pre-market generally. So all the moves last night and this morning have been on somewhat light volume, but it is up around 4%. Obviously the pivot high from early August is 25.95. We're not quite up there this morning. Just revisit where that is, 24.55. So that'll obviously be the pivot to watch if we do get above that. But I do think this is another one that has a heavy short interest, could erupt a little bit this morning during the session. Normally after earnings, if it does squeeze, it happens during the session more so than overnight. So I think there still could be some juice left in this one. Just another one to keep an eye on today on what overall could be a somewhat quiet Friday. But that'll do it for today's morning call. I don't want to stretch us too thin. The market has had some really nice moves, a lot of them based on earnings. So not always easy to take advantage of those earnings moves, but there have been some option plays that have been shared in the virtual trading floor that maybe people have been able to take advantage of. But in general, I think some sideways digestion would be healthy for this market, and I don't think there's a lot in the way for us to rally the rest of the year, but we'll continue to monitor composure, monitor the price action. This has been John Darsie here for your morning call. We'll see you back here for the daily recap.